The only way really to become a better trader is to advance. And the only way to advance as a trader is to be a learning from mistakes kind of person. You could call them mistakes, or you can call them whatever it is. Learning from situations where you wouldn't want to do that again. So if I'm going to become a better trader than I am, which I always want to be, I always want to be a better trader. You always want to keep advancing. I really, really, really need to listen to myself about there's no need to hedge in a bull market because everything recovers. Like I need that. For me, that's where I'm at in my trading journey. That's a realization that's the kind of thing I need to write on a piece of tape and put on my wall. For you, it might be something much more basic. You're at the beginning of your journey. I'm managing like 50 positions. The things I worry about are kind of like a little bit different. But I'm just sharing with you also the mental process that you have to have even as a beginner. Always. What do they call it? The mindset that you have to have as a trader that can advance. You can't advance. This is the key I'm trying to tell you. You can't advance as a trader unless you can learn from things you don't want to do again. Because what happens to other traders is they don't learn that. They don't learn that. They don't change, and then it repeats. You see. So you have to become someone who can advance, grow, as a trader. And you're not if you just you can learn more and more stuff. This is it. Here you go. You can keep learning more and more stuff, but you won't advance as a trader. If the thing that advances you is not learning more per se, like knowledge and techniques and strategies, that's all kind of knowledge, right? That's not what advances you as a trader. What advances you as a trader is learning what you need to leave behind. In some sense, it's what I always say about wisdom. I have an expression about wisdom. Wisdom is knowing what not to do. Those moments of wisdom are you advancing. If you hit a little tiny pebble of wisdom, you've just stepped up. You've just advanced. You've just grown. Kind of weird, right? I mean, you won't think of wisdom as that. You don't think wisdom seems to be like a plateau you get to, a level way up in the clouds, right? The wisdom, right? However, wisdom is in itself a sign that you just advanced, or that you were an advancing trader. So, and in case I wasn't clear enough, somebody said something. Good morning. Oh, and have I been learning? Oh, yeah. Yeah, Oh, no. I'm sorry to hear that, Randy. But, the market has been really tough the last month and a half, and that happens. I mean, look at that. This is, right here. Where's okay. Everything's been just kind of depreciating for like a long time, longer than a PCS that we like to do would love, However, because it's a PCS, hopefully you didn't get hit too hard. You would have if it was stocks. You would have if it was shares. But if it was PCSs, you're probably okay. The PCS stuff and system is, designed to help pad you from fairly normal pullbacks. I think you've probably discovered that and found that over last year. But so what I will say, Randy, is that that just happens. That sometimes you have a dip. Okay, good. You went to cash all 3 weeks back. That's good. And I think that's a perfect example of like maybe after that big panic day, huh? This one here. And you just got to take the loss and then you just sit in the dip. You know what I'm saying? So there's two ways it goes. You either convert to cash, like you said, take that loss and sit in the dip and wait for the market to turn nice again, right? Or you take that loss and then it keeps going and then, you ride out the dip. So either you're out and you sit in the dip, and so therefore you're quote unquote preventing yourself from bleeding out anymore, or you literally have learned. I would say that like with maybe PCSs, that's fine, but like with stock shares, you got to be a bit more careful. And so, and yet you do factor in pullbacks. And so like right now I have 50 positions, and remember, I think I had 70. I think I had 80 at one point, maybe 70. Let's call it 80. I have 50 now. I don't know. Maybe I have 40. Maybe I have 60. I don't know. But let's just call it I have 50 now. And I had, let's just call it 80 a month ago. Because things were going up and up and up. What happened was, just prior to the peak, as I got into like 80 positions, I was taking profit. Like sometimes I have, 70 take profits in one day. Bling, bling, bling. It's like, pennies from Evan coming down. And guess what? That creates padding for pullbacks. So we did get the pullback, and now I'm sitting in it, but I also didn't convert to cash completely. I have 50 positions. Because the way I did it was I just simply follow the rules. I'm not going to, you don't want to guess when you have a system. So, my system, as you've been seeing, Randy, the other system of a mass, snowballing system, skims profits as they go. That adds to your bottom line, sort of gives you a new footing as you rock climb the cliff, if you will. That's the way I like to think of it, is you're sort of kind of like chipping off from the top, and then those become a rock pile that goes underneath your feet. And then as you continue to chip off from the top, it gives you some footing to actually go higher. And yet the distance between your feet and your hands doesn't change, but you're going up. So it's possible that should the market collapse, you lose everything from the hands to your feet, but not from the pile of dirt that you've grown. Does that make sense? So the padding, the skimming, all the profits you're taking, all these little teeny weeny little pieces, these little partials, they drizzle down and they create somewhat of a safe haven for you should everything just go south. And for me, that's happened on 30 positions out of 80, if we're just speaking, guesstimating here. And each of those positions of the 30 out of the 80 has stopped out. There has not been one that I preemptively guessed I should exit on. And in fact, I probably gave two things. One, I gave everything a lot of breathing room. So I'm a better trader now than I've ever been. And, I used to choke out trades too early. Nothing wrong with that. You're making profits, but I'm trying to do a snowballing where I'm staying in the things that work. And in order to stay in those things that work for that particular system, the snowballing system, you kind of want to give your stocks more freedom to roam. And so, one, I am allowing, I'm not choking them off early, and I'm allowing them to more freely move. But also, I accidentally didn't get out of some things. So like I stopped out, and we know, Randy, you know, by my technique, that when I stop out, it gets rid of 50% of your position, but not all. You're supposed to diligently get in there and then sell the rest of it. Well, there was like 2 or 3 or 4 times where I didn't, and then I had to take a little bit of a further loss. There was also like 1 or 2 or 3 times where I didn't, and I was able to reclaim a little bit more gain on the, you know, on the loss. So, you know, lose less, right? So a little bit back and forth there, but what I'm saying is that I'm saying I'm in good shape despite the fact that 30 positions stopped out, and other positions are just doing their thing. Some of them are close to getting stopped out, and when they get stopped out, I'll stop out of them, and that's the way I'd like it to go. Now, if we were in a bear market, you know, it would just be wrong to be trying. You're supposed to sideline. But if we were in a bear market, none of that would work. You'd have to preemptively guess and get out. That's why you should never really have open positions, especially long ones, in a bear market. But we're not in a bear market. We're in a bull market, and it's just testy. And these things that happen are parts of bull markets. Incredibly bad things happen to bull markets, and you're still in a bull market, such as crashes. Stock market crashes. A lot of people think, oh my God, stock market crashes are bearish. Yeah, they are bearish, but they're not a bear market. They're just bear-ish. So what a lot of beginners, maybe amateurs, and maybe even, you know, advanced intermediates think is that if there's a stock market crash, all hell's broken loose. We're no longer in a bull market. You need to become a short trader, you know, all this kind of shit. And that's a way to get your face ripped off. It's not a good idea. Fact of the matter is, a bull market experiences crashes, corrections, deep corrections, panics, flash crashes, pullbacks, consolidations. I'm trying to think of anything else. And, you know, quite a bit, everything, stagnations, uncertainty, you know, but it's still a bull market. And that means it's green as go for long positions. It just might not be the best moment, and you want to time it better, but you don't have to like worry too much in a bull market. So long as you got your proper strategies, like, you know, you've got your stops set. Because if there is a stock market crash and everything goes to hell, which it will recover from because it's a bull market, and everything goes to hell, you're just going to get stopped out of all your positions. You're going to take a hit. And guess what? So is everybody else. And there's really no way necessarily to prevent that, except from, well, your stops are the best way to handle that. You know, you can kind of make some guesses if it's a serious doomsday something, you know, like stuff we shouldn't even speak of, but like, you know, huge ordeals that don't look like they're going to be corrected in a day or a week or a month or 3 months. So in those situations, you know, but again, you're guessing, you know. You could end up closing 50 positions, or see, what I would do is I would just hedge if that were the case. You know, I've hedged twice, as you can see here. I've hedged twice in the last 2 weeks, and both times they were wrong. Both times I needed to release them. I released it over here, and I missed out on $1,600 of gains from here, $1,600 of gains from here to here because I had neutralized my portfolio with my hedge. This morning, I missed out on $400 of gains. So I've now, because I've hedged this year, I'm now down $2,000, if you could think of it that way, in gains I could have had on my positions and in my portfolio had I just not hedged. And so that's something I need to learn in order to advance myself again as a trader. You know, it's happened 5 times in the last year and a half because we've been in a bull market where I've hedged. Actually, probably in the last 2 years, it's probably happened 6 or 7 times where every single time I have hedged, I didn't need to. And it turned out to be a net loss. Actually, I think there was 2 times out of those 8 where I was able to just release the hedge when it was at a decent profit. 2 out of 8 times. But net, it would have been just fine, and I would have made more money if I actually just never hedged all 8 times. So this is more about just mindset and you just realizing that if you need to advance as a trader, it's going to be a kind of thing like how many times does this need to keep happening to you until you learn kind of thing. And I think that's what you were really relating to, Randy. And you just have to adopt whatever that learning lesson is as gospel. You find a learning lesson, and sometimes it takes time, but eventually it could become part of your Bible. Now, there might be other books that say something a little bit adds a little finesse to that, you know, or slightly says something that maybe calls it into question. But you know, the Bible is a big book. It's a compendium of books, you know. So when it comes to this stuff, things can still be gospel and still might not be true sometimes. Isn't that interesting? Just depends whether you're in heaven or if you're in hell. So what did you say here? Let's see. Been spending all my available time to go back and rewatch, restudy, and fine-tune my market mastery study, so that's good. Gone through some 3 times now. Oh, that's really good. And also, I would say that I have said so much in the last year and a half and not had a decent chance to really edit what I've said in master classes to turn those into market mastery lessons uploaded. And so, also go back to those classes probably and thumb through them, see if I'm onto something, rewind it and start it, and then rewatch that too, I would say, because I actually do think there's been quite a bit of excellent stuff we've talked about in certain master classes over the last year and a half that haven't gotten into the lessons yet, that it's a tragedy they're not lessons yet. So here goes the market actually reversing down and saying that I shouldn't have taken my hedge off. It drives you crazy. But I'm actually glad I took my hedge off. So when I put this hedge on, what I discovered was I shouldn't have taken it off. That I should have kept it on. And then I put another hedge on the other day, and I learned that I shouldn't have put it on. Now the market's acting like I shouldn't have taken it off. I mean, this stuff, it drives you nuts. And I just, I'm going to have to rest on my prior learning lessons of that well, 2 out of 8 times, 25% of the time, a hedge will work in a bull market, but 75% of the time, it's unnecessary to hedge in a bull market. And so par on par, net, you're just better off. You'll be better off in your performance by the end of the year as far as P&L in a bull market that's still a bull market to just endure what you thought you had to hedge against. This whole talk, for the last, 20 minutes about the hedge thing, we can wrap that up and put that into a lesson on hedging, but it doesn't really apply to anybody not needing it right now. But it's still about mindset, but it's a very good lesson on hedging as well. So, eventually, we'll get all that stuff chopped up and put out there, but that's all I got to say about that. Like Forrest Gump, like it's hedging is the exact lesson, but the real takeaway is mindset about advancing yourself as a trader. You don't advance as a trader by learning more knowledge, because that doesn't cause your trades to work any better. More knowledge can almost be a curse. But what I'm saying is, like, the sage thing that I'm saying is that to advance as a trader, you have to learn to not do things you thought you should be doing because those things you've learned don't work. Now, you want to be careful that you don't do that to something that's a nice, robust strategy that's just going through a slump, like during a month pullback or something. You don't want to just, you do need to get a lot of sample points. If you were to stop doing what you thought would work because it didn't work one time, every time, you'd have nothing left. Everything doesn't work sometimes. So, it costs money, R&D, time, whatever you want to call it, to get where you want to try eliminating something, and then all of a sudden, you give it a try, and then maybe it takes another 3 to 6 months for you to realize, yeah, that worked. So then you put a pin in it, and now you're an advanced trader. So it's a long process, you see. It's like learning to become Michael Jordan is not about getting the right shoes on and buying the right basketball or even practicing. It's about doing, yeah. I mean, practicing, yeah, it's a big part of it. But, it's about time and thinking and honing. That's probably a honing. That's a really good word for kind of like what I'm talking about. Honing as a trader takes time. Like honing one thing might take a year. Like this whole hedge thing I was just talking about, like in last 2 years, I probably hedged, like I said, 8 times, but it might actually have been more. Could have been 10 or 11 or 12. But my mind wants to say that it only worked out 2 or 3 times, a small portion of that period. But that because it didn't work out the majority of the time, wasn't necessarily the majority of the time, I was at a loss on the idea as a whole. They call it expected value. You learn what the expected value is, but it takes time for you to put in all the data points and be able to get back a more robust statistical conclusion.